Rising inflation figures have scotched any chance of further relief tomorrow for mortgage holders.
Off-the-plan apartments, units and townhouses will have their stamp duty significantly reduced in Victoria.
Jacinta Allan, she's gone out today and made a quote saying that she wants to make Melbourne the townhouse capital of Australia.
Here's what the Victorian government doesn't want you to know. More than 500,000 Victorian households are in mortgage stress right now. That's 520,000 families struggling to make repayments. And in some Melbourne suburbs, the situation is even worse. 100% of households are drowning in mortgage debt.
This is exactly where Victorians have told us they want to see more homes built for more Victorians.
While Premier Jacinta Allan announces stamp duty concessions that experts say won't solve anything, Melbourne families in suburbs like Berwick, Narre Warren and Cranbourne are facing the biggest mortgage crisis in decades. And here's the brutal truth. Defaults are already happening and they're about to get much worse. In this video, I'm breaking down the exact numbers the government is trying to downplay, which suburbs are getting absolutely hammered, and why the Premier's solutions are making things worse, not better. Right, let's start with the data because the scale of this crisis is absolutely cooked. According to Martin North, principal analyst at Digital Finance Analytics, and this bloke tracks mortgage stress data more closely than anyone in Australia, 520,000 Victorian households are currently in mortgage stress. That's 1 in every 5 mortgage holders in the state. Mortgage stress means you're spending more than 30% of your gross household income on mortgage repayments. At that point, you're making serious sacrifices, cutting back on food, skipping medical appointments, pulling kids out of activities. You're in survival mode. But here's where it gets even more disturbing. Moody's analytics data shows 5 of the 10 regions with the highest mortgage delinquency rates in Australia are in Victoria. Delinquency means people are missing payments, not just struggling, actually defaulting. And the worst hit areas, all in Melbourne's outer suburbs. We're talking about Casey, which includes Berwick, Narre Warren, Cranbourne and Pakenham. These aren't fringe suburbs with dodgy economies. These are established family areas where people have been living for decades. Now check this stat. Digital Finance Analytics found that 100% of the 18,324 households in Berwick are in mortgage stress. 100%. Every single mortgage holder in Berwick is spending more than 30% of their income on repayments. Let that sink in. An entire suburb locked in financial stress. These suburbs bought into the property boom thinking they were securing their futures, and now they're trapped. And this isn't me making stuff up. Here's 7NNEWS confirming it.
The RBA is tipped to end 9 months of interest rate cuts in a bid to curb rising inflation. It's a move that will likely put pressure on more than 500,000 Victorian households who are already suffering mortgage stress. Families in the southeast top the list, with households struggling to make mortgage repayments in Berwick, Narre Warren, Cranbourne, Pakenham and Frankston.
More than 500,000 Victorian households are experiencing mortgage stress. The Victorian government knows this. They have the data. They've seen Martin North's reports. They know 520,000 families are drowning. And yet, what's their response? Stamp duty concessions on off-the-plan apartments. We'll get to why that's a joke in a minute. So who exactly are these 520,000 households in mortgage stress? Let me paint you a picture of the typical Melbourne mortgage holder right now. Meet Tom and Sarah, both in their early 40s. Tom's a tradie earning $85,000. Sarah's a teacher earning $70,000. Combined household income, $155,000. By any measure, they're doing all right. They bought a 4-bedroom house in Cranbourne in 2021 for $650,000, put down a 10% deposit, borrowed $585,000. Back in 2021, they locked in a fixed rate of 2.19% for 3 years. Their repayments were $2,200 a month, manageable. They had money left over for the kids' school fees, family holidays, savings. Fast forward to 2024, their fixed rate expired. They rolled onto a variable rate of 6.5%. Their repayments? Now $3,900 a month. That's an extra $1,700 per month, $20,400 per year they suddenly have to find. This is what's called the mortgage cliff, the point where fixed rates expired and borrowers fell off the edge into massively higher repayments, and it hit Victorian families harder than anywhere else in Australia.
Well, I think the message is clearly going to be no interest rate cuts, certainly not on COP Day, obviously, Carl, after that inflation shock last weekend. Very unlikely we'll get one at the meeting in December as well.
The Reserve Bank raised the cash rate 13 times between May 2022 and November 2023, from 0.1% to 4.35%. That's one of the fastest rate hiking cycles in Australian history. And now, the RBA governor says there won't be any more cuts in the near future because inflation is still too high. So back to Tom and Sarah. They're now spending $3,900 a month on their mortgage out of a combined income of $12,900 per month. That's 30.2% of their gross income they've crossed into mortgage stress. And they're not alone. In Berwick, 18,324 households, 100% of mortgage holders, are in the same boat. In Narre Warren, it's nearly as bad. In Cranbourne, families who bought during the boom are now choosing between mortgage repayments and groceries. These aren't people who bought beyond their means. They're families who locked in low rates during COVID, bought modest homes in outer suburbs, and got absolutely blindsided when rates tripled in 18 months. And here's the thing. Tom and Sarah are the lucky ones. They both still have jobs. They're both healthy. What about families where someone loses their job, or gets sick, or has unexpected expenses? They're the ones defaulting right now. Moody's Analytics tracks mortgage delinquency rates. That's people who've missed payments. And 5 of the top 10 highest delinquency regions in Australia are in Victoria. Melbourne is the mortgage delinquency capital of the country. So how did we get here? Why is Melbourne specifically getting hammered worse than Sydney, Brisbane, or Adelaide? Factor 1, the mortgage cliff. During COVID, the RBA dropped the cash rate to 0.1%, basically zero. Banks were offering fixed rates of 1.99% to 2.49% for 2 or 3 years. It was the cheapest borrowing in Australian history. Victorian households went all in. According to banking data, roughly 40% of Victorian mortgages were on fixed rates by mid-2022, higher than any other state. Why? Because Melbourne had just come out of the world's longest lockdowns. People wanted certainty. They wanted to lock in low rates and rebuild their lives. Fast forward to 2024 to 2025, and all those fixed rates expired. Hundreds of thousands of Victorian households rolled onto variable rates that were 3 to 4% higher than what they'd been paying. The mortgage cliff didn't hit gradually. It hit like a freight train. The RBA's own research shows that interest rate increases reduce borrowing capacity and increase financial stress for existing borrowers. They knew this would happen. They raised rates anyway because inflation was running hot. And they had to. Inflation hit 7.8% at its peak. Tradies couldn't get materials. Groceries doubled in price. Petrol hit $2.30 a litre. The RBA had no choice but to slam the brakes on the economy by jacking up rates. But here's the problem. Melbourne's economy was already weaker than other capitals. Victoria has higher unemployment than NSW or Queensland. The construction sector, which employs heaps of people in outer suburbs like Casey, has been in a downturn. So Victorian households got hit by higher rates and weaker job markets at the same time. Factor 2. Victorian households borrowed more relative to their incomes than other states. Because Melbourne property prices were lower than Sydney but higher than Brisbane, People stretched further to get into the market. Average loan-to-income ratios in Victoria are among the highest in the country. When Tom and Sarah bought in Cranbourne for $650,000 in 2021, they were borrowing 3.77 times their combined income. That's manageable at 2% interest. At 6.5% interest, they're in serious trouble. And this pattern repeats across tens of thousands of households. People borrowed at the maximum they could afford at 2% rates, never imagining rates would triple. Martin North's modelling shows that once you cross the 30% mortgage stress threshold, your risk of default increases exponentially. At 35%, you're in severe stress. At 40%, you're one bad month away from missing a payment. And that's where 520,000 Victorian households are right now, teetering on the edge. So what's the Victorian government doing about this? Well, Premier Jacinta Allan just announced her big solution.
Off-the-plan apartments, units and townhouses will have their stamp duty significantly reduced in Victoria.
Stamp duty concessions on off-the-plan units and townhouses. That's the answer. If you buy a new unit or townhouse off the plan, you'll pay reduced stamp duty or potentially none at all. Here's what Jacinta Allan said. We asked industry what they need to build more homes sooner. And this is what they said. And here's what the opposition said.
You can build apartment buildings now in Melbourne if you wanted to. There's plenty of land to put them on in Docklands and other places. People aren't building them because they can't afford to. The market's so flat. Investors are fleeing. These are just big announcements with no substance, no money behind them, and it's just Jacinta Allan trying to look busy.
Jacinta Allan is trying to look busy. Shadow Housing Minister Richard Riordan tore into the policy, saying it doesn't address the actual crisis, families in existing mortgages who are drowning right now. And he's absolutely right. Let's break down why this stamp duty concession is basically useless for the 520,000 households in mortgage stress. Problem 1. It only applies to new off-the-plan purchases. Tom and Sarah in Cranbourne aren't buying another property. They're struggling to keep the one they've got. This policy does nothing for them. Problem 2. It's designed to boost construction, not help existing homeowners. Sure, developers will benefit, building companies will benefit, but the families currently missing mortgage payments, they get nothing. Problem 3. Even if you are in the market to buy, off-the-plan units come with massive risks. Settlement can take 2 to 3 years. You're locked into contracts before the building even exists. And with construction companies going bust left and right, you might end up with nothing. Here's what the Committee for Economic Development of Australia, CEDA, said about the Victorian budget. Improving housing affordability would be the most effective thing the government could do to reduce cost of living pressures. Translation, the government is focusing on the wrong thing. Stamp duty concessions for new buyers don't help families in mortgage stress. What would help? Direct relief for mortgage holders, interest rate subsidies, payment deferrals, actual financial support. And here's what the Victorian Council of Social Service said. The stamp duty concession does not address the key structural issues that lock Victorians out of the housing market. So we've got 520,000 households in crisis. The government solution helps none of them. Instead, it's a developer handout disguised as housing affordability policy. And here's the worst part. While the government announces policies that sound good in press releases, banks are quietly starting the foreclosure process on families who've missed multiple payments. So where does this lead? What happens to these 520,000 households in mortgage stress? Martin North's modelling shows a typical progression. Mortgage stress leads to missed payments, which leads to arrears, which leads to defaults, which leads to foreclosures. Not every household in stress will default, but a significant percentage will. If even 5% of those 520,000 households default, that's 26,000 properties hitting the market in forced sales. If it's 10%, that's 52,000 properties. And here's the thing, those forced sales happen at below market prices because sellers are desperate. During the GFC in 2008 to 2009, Australia saw around 22,000 mortgage defaults nationally. This could be bigger. And it's concentrated in one state, Victoria, and specifically in Melbourne's outer suburbs. Suburbs like Berwick, Narrawarren, Cranbourne, Pakenham, where 100% of households are in stress, are at the highest risk of cascading foreclosures. When your neighbour's house sells for $50,000 below market value because the bank forced them out, your property value drops. Then more people go underwater on their mortgages. It's a downward spiral. The big four banks, CBA, Westpac, NAB, ANZ, have all increased their provisions for bad debts. That means they're expecting more defaults. They're not saying it publicly, but the financial reports tell the story. They're preparing for a wave of mortgage failures. And the Reserve Bank? They're watching closely. Michelle Bullock has said the RBA is monitoring financial stability risks, including household debt. But with inflation still elevated, they're not cutting rates anytime soon, which means no relief for mortgage holders. Best case scenario, inflation comes down naturally over the next 6 to 12 months. The RBA cuts rates by 0.5 to 1%. And some pressure comes off mortgage holders. Some families refinance to lower rates. Some manage to hold on. Worst case scenario, inflation stays sticky. The RBA holds rates at 4.35% for another year. Unemployment rises and defaults surge. Foreclosures hit record levels. Property prices in outer Melbourne suburbs crash 15 to 20%. More people go into negative equity. It becomes a full-blown mortgage crisis. Right now, we're somewhere in the middle of those two scenarios, but we're leaning toward the worst end. Here's the truth about Melbourne's mortgage crisis. 520,000 Victorian households are in serious financial stress. 5 of the top 10 mortgage delinquency regions in Australia are in Victoria. 100% of Berwick's 18,324 households are spending more than 30% of their income on repayments. This isn't a beat-up. This isn't exaggeration. This is happening right now to families across Melbourne's outer suburbs. And the Victorian government's response, stamp duty concessions on off-the-plan units, does absolutely nothing to help them. I'll be covering Victoria's mortgage crisis every week, tracking the defaults, analysing the government's response, and demanding accountability. Subscribe to Aussie Explained so you don't miss the next video. This is the crisis the Victorian government is trying to downplay. 520,000 households in stress, defaults already happening, and a Premier who thinks stamp duty concessions will fix it. If you're one of those 520,000 families, you're not alone. Hundreds of thousands are fighting the same battle. Stay informed, know your options, and keep pushing for real solutions, because the current government response is not just inadequate, it's insulting. Thanks for watching. See you in the next one.